So investment comes in many important forms, financial but also intellectual, and the investment that the good or the right mentors and advisors can make is just as important. So this morning we're joined by panelists from Tampa Bay, Miami, and Silicon Valley who have all seen it, they've seen it all as entrepreneurs and exits in the hundreds of millions and highly sought after investors and advisors. So we have Steve MacDonald, who's the founder of MyMatrix, which sold in 2017 for $250 million. He's now an investor, a member of Florida Funders. Tony Jimenez, who's the managing director of Medina Capital. It's a growth venture fund focused on cloud infrastructure and computing. We've got Jake Seid, who's the managing director of Stonebridge Ventures, currently based in Silicon Valley. And we have Seid-Coelius, a managing partner of Coelius-Capital, and he runs a syndicate on Angel Lists. He spent 10 years running Trigit. And we have our moderators, so Tom Wallace, who has experience in every stage of the startup entrepreneurship, including creating, building, running, and selling several tech companies, most notably TriBridge, which is a $150 million exit tech services firm. So without further ado, we'll turn it over to our panel.
I was an investor in TriBridge, so I want to straighten that out. So really excited about our panel we have here today. We have two Floridians. We have our own Steve MacDonald, and we have Tony, and then we have two Californians, two people from the Valley, from San Francisco, with Zach and Jake. So we'll get into that in a second, but I think two sides of the audience. We have entrepreneurs here, and you're going to hear from some very successful entrepreneurs and get to learn from them. And then for those of you that are raising money, you get to hear what these guys look to invest in. And then investors, you get to hear from some of the people that are really good at investing. So best practices there. I've heard it said that angel investing is the best job in the world. I don't know if that's entirely true. We've got 3 angels and 1 venture capitalist, Tony down the ends of venture capitalists. But angel investing is a lot of fun. And it's fun. You get to work with really bright people. You get to work with really passionate people who are really trying to change the world. And as I was talking to Zach before, it's not like being an entrepreneur because you don't get punched in the face every day. You don't have the sleepless nights. So, and at the end, sometimes there's a great reward. Most of the times there's not a great reward, but sometimes there is, and that feels really good. So with that, we'll get started. I just want to kick off. Why don't you guys introduce yourself, give a little bit about your background, maybe the number of deals you've done, your average check size, and what you like to invest in. Steve, you want to start?
Sure, yeah. Background here, I grew up in Zephyr Hills and went to college here locally at University of South Florida. And had a couple different companies. I started a company in 1999 called Tech Health. It was another healthcare company, and then started MyMatrix in 2001. Both companies we had pretty decent exits on. And then I moved into, I joined Florida Funders. I've been angel investing for about 5 years. I'm in about 100 different deals, and I'm also on the board of Florida Funders and active with those guys. So,
great.
Hi, my name is Jake Seid, and last 2 years I've been doing angel investing, focusing mostly on B2B companies. So everything from fintech, property tech, to more infrastructure-oriented technologies like hybrid multi-cloud. Before this, I was president of a company called 10X. We built the largest online marketplace for real estate transactions. It was called auction.com before that. We ultimately sold that to a private equity firm, T.H. Lee. And before that, I was at Lightspeed Venture Partners for 11 years doing investments.
Hi, my name is Zach Coelius. I'm a 4-time entrepreneur. I like to say I'm now a washed-up entrepreneur, but I washed up on the beach. It's a lot warmer here. The beer's colder. It's a lot easier. Now I'm a full-time investor. About 50 million of deployed capital so far. Check sizes are anywhere from like 200 to 300 on the low end for early stage, up to 10 million for later stage stuff. Run around looking for companies that I can try to help out.
I'm Tony Jimenez. I'm managing director at Medina Capital. At Medina Capital, we manage close to about $500 million. We focus pretty deep into the cybersecurity space as well as data and cloud infrastructure. And we're proud to be based out of Miami, Florida.
Great. Jake, I thought I'd start with you, being you're out in San Francisco. Have you invested outside of the Valley and outside of San Francisco? Do you look at Florida companies? And what do you think of the Florida tech scene and the startup scene here?
Yeah, really thanks to Steve. This is my really first exposure to the Florida tech scene, and it's been quite eye-opening. I have invested outside of the Valley, and it's been places like Europe and Israel that probably have been more traditional sources of entrepreneurship. But the thing that I've been impressed with here is the amount of talent coming out of universities. It's a great place for people to live and be based. And what I'm seeing more and more is that companies and talent don't necessarily want to be based in the Valley because it's just too damn expensive, right? And there's a lot of other places that are better places to live, a lot less costly. And so I think there's a real opportunity. I have a good friend at Magic Leap. He was telling me that they've moved 400 families from outside of Florida to their area.
Wow.
And I think there's more and more of that opportunity.
Yeah, good. And Zach, also, you're out in California. Have you looked at companies, when you go outside and look at companies in Florida, I don't know if you've done any Florida investing, do you see a difference in the valuations? Can you speak to that?
Yeah, so Steve and I met through a company we're invested here in Florida called Finexio, and I mean, it's awesome, and they're doing great, and it's a great team, and they kind of opened my eyes to some of the opportunities in Florida. But yeah, I mean, just like the rent and the cost of engineers and the cost of everything in California is really, really high. The valuations are incredibly high. So I'm always looking for companies all over the world that are outside of that bubble of insanity because prices are much more palatable. Yeah, absolutely.
Yeah, good. And Tony, I thought you're doing a lot in cybersecurity in the cloud. I was thinking about the cloud. Do you think there's still a lot of opportunity left in the cloud? AWS and Microsoft, these huge companies own it. Is that ship sailed, or are you still seeing some opportunities there?
The clouds are in the sky. I think the universe is the opportunity at this point. There is an infinite amount of opportunity in the cloud space right now, as well as cybersecurity. Kind of just wanted to piggyback off of Zach's experience. We also, so we're based out of Miami, but we invest globally. And sort of anecdotally, one of our companies we found in Bogota in Colombia. And it's an incredibly talented, deep sort of engineering team that had built an incredible sort of bank-focused product, cyber product. And, sort of a success case for us. We were able to find them, get a discount because they were in Latin America, and then actually bring them to Miami, headquarter them out of Miami while they kept the engineering team, keep the cost low in Colombia, and help them scale their business into the States. And now they have the Bank of Japan. So all done from Miami with kind of building that bridge into Latin America and connecting the rest of the world.
Great, we love those success stories. Tony and I were talking before, I don't know how many of you heard about Park Jockey last week, got $100 million from SoftBank, the largest fund in the world, and they're there in Miami, and you didn't know of them, I didn't know of them. It's just amazing. I mean, it's happening all around us. Steve, you've done over 100 investments in 5 years. You've looked at a lot of deals. So when you're looking at deals, what do you look for? What are the things that excite you the most? And do you bet more on the jockey or the horse?
Absolutely, more on the jockey. I think there's lots of great ideas, but there's no great idea without great execution that's going to ultimately end in a successful company or exit. So, always the jockey.
Good. Jake, I noticed you're an engineer, electrical engineer, MIT electrical engineer. We were there at different times, I think.
Reformed engineer, not engineering anymore.
So, deep technology, what do you see out there today that you really like, from your background? What part, is it AI? Is it autonomous vehicles? Or what really excites you? IoT? I don't know.
Yeah, I think we're in a very special time where, to me, I got into the Valley in '98, joining Cisco, and venture in 2000 with Lightspeed. So have seen different cycles, and to me, there are more themes happening in parallel now that are interesting than any time before. So, it's very buzzwordy, but you really do see a lot happening in applied AI, and again, just scratching the surface. The whole cloud opportunity, just scratching the surface. Even though they're these big cloud companies, I view it as, you could look at an example. Amazon's been around 25 years, And literally every year or every other year, there's a multi-billion-dollar exit in e-commerce. PayPal was funded, decade more ago. There are multi-billion-dollar exits happening in payments on a regular basis. And so I think when you have these trillion-dollar markets, you're just going to see a long wave of productivity, of innovation, value being created. So again, specifically, yes, applied AI, yes, IoT, yes, the whole cloud space. And again, think about for the enterprise, the whole trillion-dollar enterprise market is being replatformed by cloud, private cloud, public cloud, the connection between the two. So you get to rethink all these traditional parts of the stack to make sense for this new architecture. AI is a new architecture that allows you to rethink parts of the stack, again, to be based around this new technology. So really tremendous opportunities. And those are just in the areas I focus on. I'm sure there's other things happening in deep tech regarding healthcare and life sciences as well.
Healthcare is a really interesting market and one that applies to a lot of us here. Florida's obviously got a very robust healthcare industry going on. Steve, your last company was a healthcare company. Do you look at healthcare a lot? Do you invest a lot in healthcare? And what are your thoughts there?
It's funny. I actually don't invest a lot in healthcare because I came from the space and I know how complicated and how hard it is. But there's one of the great things that's happening, that has happened, is that the consumer is now taking more responsibility for co-payments. They're taking more responsibility for finding their own physicians and finding the right care. And insurance companies have forced those payments downstream quite a bit. And that has, I think, allowed for a lot more innovation in how companies are pursuing opportunities. One of the main obstacles in healthcare is how do you get paid, and so the companies are going out now and they're managing what they call episodic care, and they're being reimbursed in episodic or not based on episodes, but more based on a holistic approach. And companies that are kind of approaching that as from a disease state and getting reimbursed that, I think that there's a lot of opportunity in that. And AI with the amount of AI and data, healthcare data that's being forced through the new AI engines, there's quite a bit of opportunity in that as well.
Yeah, good. I can't talk to investors without talking about big wins, big losses, big misses. Misses is a better word. Steve is one of my big misses. I passed on investing in Steve's company about 12 years ago, and it was like a 55x return. So we all have them. I thought I'd go to you, Zach, because I know you've got a great story to tell with Cruise. Why don't you tell us that one?
Yeah, so in my last company, it was like a 10-year slog. I mean, just the swings of brutality and joy had no end. And one of the guys I kept trying to hire was this guy, Kyle, who's one of the smartest engineers I knew. And he was smart enough to keep saying no to me, but he was really, really good. And then, so after I sold my company, I was sort of like a lost little puppy for a little while. Because when you go from being a CEO and having, the entirety of your world revolving around one thing to suddenly having nothing to do, it's a very sort of weird experience. And I was having sort of coffee with all my friends, because that's what you do when you have nothing to do. I was investing, but I was really just sort of trying to figure out what to do in my life. And so I had coffee with my friend Kyle, and he had just started this company called Cruise, which was an autonomous car company. And I don't know that much about the sort of hard science of autonomy, but I know Kyle really well, and he's really smart. And if there's one thing I do know, though, I know the look in the eyes of an entrepreneur when they find it. There's something about this business where it's brutality endlessly, and then all of a sudden you find it, and the light in their eyes is very powerful. They're just like, you can see it, and I could see it in his eyes. And he was like, I think we got it. And I was like, oh my God, I'm in. Done. And so one of my very first investments was $100,000 into Cruise, just because of that. Nothing else really to it. 9 months later, I'm waking up, like all of us, I grab my phone, I'm looking through my messages, and one of my investors is like, what just happened with Cruise? And literally the week before, Kyle had been at my house having dinner. And he's sitting there, we're two, 3 bottles of wine in, like having a great dinner, it was like really nice. And he's like, as he's leaving, as I'm washing the dishes, he's like, hey, by the way, something good's gonna happen in a little while, you'll be excited. And I was like, yeah, whatever. I really didn't think about it at all. So then I'm looking at my phone, he's like, what happened with Cruise? I'm like, I don't know. So I go to Google, Cruise, $1 billion exit. I mean, unbelievable, right? Like here I am, just like literally just making this investment because he's my buddy, and like 9 months later, it's $1 billion exit. And I think that's like the power of what all of us are part of here, which is that like there's so much value that's being created by technology that like those sorts of things can happen and will continue to happen. Like it's just amazing. Like I just realized the other day that like my friends, people I know, have now started or have been involved in companies that have created over $200 billion of market capitalization as a function of just being involved in technology. And I think that's not just because I'm special or smart or where I am. It's just that like what is being built in these rooms and rooms like this all over the world is just like super exciting. So yeah, when the Cruise exit happened, I was like, holy shit, it's pretty crazy. So yeah, dumb luck is a powerful force. In this, like, if you bet in technology, it'll happen, I think.
So the next time you got together with him for dinner, I hope you bought.
Now, a very rich man.
Yeah, I'm sure.
I don't think he let me take that check, even though I tried.
Okay, great. Hey, Tony, I know you guys are really big in cybersecurity. There's a lot of entrepreneurs here involved in cybersecurity, a lot of investors looking at it. Cybersecurity is so broad. Tell us what you think. What are the opportunities, what you're looking at? Educate us on that.
Sure. So, I mean, you don't have to be a cybersecurity expert to know that the market is exploding when every day there's a new breach of a new sort of big logo company out there. Our data is being hacked by virtually everyone. There are nefarious characters all over the place trying to access our data. So, much like sort of the funeral business, it's, you don't want it to happen to you, but it happens every day. So we think that cybersecurity is exploding. We're only kind of at the beginning of it. When you start to think about how everything is shifting into the cloud and our data is virtually, quite literally everywhere, we see vast opportunity in getting better at the products and the systems that are being built today. So we're always looking for the next generation, the next great idea that helps businesses be able to manage this more effectively, more efficiently, and in better ways.
Good. Anybody else want to tell a big win or a big miss story? It's hard to follow Zach's story, but
I've got a...
good.
This is a miss, so I want to share it so people don't make the same mistake. I mentioned I started at Cisco, and then, this was 1998 when I started. Around 2000, I had a lot of friends going to this, startup called Google, and it was all about advertising, right? And, I thought about myself as, hey, I'm working on these hard problems. You need to solve hard problems to create a great business in the technology industry, and that's an advertising company, and I'm not an ad industry person. And what I realized is, never think of yourself as an XYZ industry person. Really use the metric of how big is the market. And if it's a monster market, the bigger the market, the better. And, the realization that even if you don't think you'd have fun in the ad industry, or if Bezos came to me in 95, I'd say, I didn't go to MIT to work in retail. That's the wrong way to think about things, right? It's like, wow, there's these $1 trillion markets or $100 billion markets, and if it's that size and you're changing it, you're going to have fun. So the whole idea, and I think this place, Zach was not an autonomous vehicle guy, right? But, keep an open mind to things that are changing. And the bigger the thing that's changing, the more fun you could have, the bigger the opportunity.
I can tell a myth story. I have one of my favorite myth stories is, and I actually didn't have capital at the time, so I wouldn't have been able to invest. But a number of years back, I was at a party, and we're on the roof. It's San Francisco, so it's cold and dreary outside, and we'd all been drinking heavily to deal with the fact that it's cold and dreary. And there's a guy who I don't know but everyone seems to have respect and a little bit of sort of like uncertainty about who's there. And we start talking, and he's like, yeah, I'm starting this company where you can like push a button and a car will show up and pick you up and take you someplace. So this is Travis when he's first starting Uber. I mean, literally, it hadn't even launched yet. And so we proceed to literally yell at each other for 2 hours about whether or not it will work or not. And I'm the idiot who was like, no way you're going to get to the taxi lobby, not a chance. They're going to crush you. And he's like, I'm a fighter. I'm going to win. I'm going to blast through all this. And we went at it for a couple hours. He was proven to be very correct, and I was proven very wrong. And so I look back, I wonder as an investor if I would have invested at that point in time. I don't know. But it did teach me a really good lesson, which is that, and it goes along with what you said about big markets, is that when you look at something, an opportunity, you just have to look at the very basic probabilities of it. And at the time, I was like 99% sure that the taxi lobby would crush him, which they almost did. They were very, very close. I mean, it was literally down to a few days there, they almost died. But yet, if you can break through those barriers into a big market, even if it's a 99% chance that he's going to fail, if it's going to return 10,000 times in terms of value, which given the size of the transportation market, it's proven to do, those are often good bets, even if it's a 99% chance of failure. And I think that's the most amazing thing about technology, which is that it can scale so fast and get so big so quickly that if you can get through those initial barriers, the green field of opportunity is really in front of you. So yeah, it's a lesson I always try to remind myself of that I'm not that smart, but I need to always just like remember that, and I think I might have a chance.
Good. That's another good one. Steve, lesson for maybe the founders, entrepreneurs out there. What's the biggest mistake you see founders make, A, when they're raising money, and then B, when they're building their business?
I think oftentimes entrepreneurs put a lot of focus in the early stages of fundraising. And I think that they kind of lose sight of like actually what they're building and why they're building it. And that I see oftentimes that the prize is like, how big was my round, at the expense of dilution or their own equity stake. They really, there's a big banner of, oh, I raised 10 million, oh, I raised 15 million, oh, I raised 20 million. And, I think that, in the long run, I think that a lot of the businesses don't need that much money. And if they look at it as opposed to the banner of what we raised, as opposed to what we actually need, it teaches oftentimes, like money, like more money is the root of a lot of problems, because you're not really looking at the details of the business as closely when your back is against the wall. And I try to emphasize that a lot with a lot of entrepreneurs. And having done that and started a company, raised a lot of money, and then ran out of money and got fired, it's pretty good. Those are pretty good lessons in there.
Yeah. Failure is a great teacher, right? I think we all agree with that. That's part of being an entrepreneur. Tony, red flags when you're looking at companies. What are the red flags you look at that, once I see this, I'm done, or we don't like to see this in companies or founders we're looking at?
Yeah, so I mean, for us, I think aligned with everybody here on stage, it's mostly about the jockey and the team behind the idea. Obviously, the idea has to make sense, but once we can get comfortable with the entrepreneur and the team behind it, we do a pretty deep technical analysis. Given the industry and the sector we're in, we have to be comfortable with the guts of the business and the technical chops behind it. So a lot of people in our business kind of have a lot of shiny objects, and then once you get down into the weeds, you realize it's all fluff. So we kind of weed out that pretty quickly. It's mostly we look at the jockey, and if we can get comfortable there, then we spend a lot of time figuring out what they have is real and how it's differentiated from their competition.
Yeah. One of the things we look at Florida funders with the jockey is how much skin they have in the game. We want to see that they're not paying themselves very much, that they mortgage their house, whatever. We like to see that. I don't know if you guys feel that way, but in terms of investing, do you prefer equity or notes? And how do you feel about safes? Because they use those a lot in California. We don't use them much here. That's safes, for those of you who are not familiar, is same as equity. What's it, same as equity, future?
Agreement, future equity.
I'm not good with acronyms, obviously. Simple agreement for future equity. You want to talk to it?
Yeah,
Jake?
look, I think, these are tools, right, and different tools for different jobs. So, I think safes and notes make a lot of sense in some of these, very early seed rounds where, the entrepreneur's trying to figure out how not to overly dilute the company, set themselves up for either a, kind of a bigger seed round or a Series A. Some early investors will be strict on equity and say, look, we need to have ownership at a certain valuation locked in. And then it just becomes a negotiation, right? And, if you have 5 term sheets from great firms, then the entrepreneur gets to dictate the terms. If they have fewer term sheets, then the investor gets to dictate the terms. But, I always think about it as kind of the right tool for the right job, and those tools have been effective for a lot of early stage situations.
I don't know. There's pluses and minuses to everything. Safes have some advantages and disadvantages, but I've invested in plenty of safes. I always prefer equity. At the end of the day, equity is what we invest in. We're trying to buy equity, so safes are just a transitionary step, but they are faster and lighter and easier. So it's certainly it's a quicker way to do it. There's tax consequences which are unfortunate, but you deal with the situation as it goes.
So you mentioned earlier, Jake, that the cost of living in the Valley and some of that. Is the Valley losing its charm? Is, Steve Case from Revolution, the fund and founder of ALL, is big on the next third wave of technology change is going to happen a lot outside the Valley, and the Valley's kind of, and some of the big dogs in the Valley have left, and some people, there's been a lot written about this. How do you guys look at, what do you think, what are your thoughts on that?
Yeah, I don't think it's a zero-sum game. I don't think it's, the Valley has to lose for other places to win. One of my neighbors joined a company called Elastic, and he was telling me, and they had a very successful IPO. They're a multi-billion market cap company, and I asked him, I hadn't heard of the company, as being a Bay Area company. He said, no, we're fully distributed. So wait, you don't have a headquarters in one particular city? It's like, yeah, we have kind of a headquarters, but we're all over the place. A fully distributed company, and it's working incredibly well. And so I think, the world we're living in with, improved ways to collaborate, but also the cost of starting a company is so much lower now. Back, when I moved to the Valley in '98, you bought Oracle databases and Sun servers and lots of consulting to make it all work, and then it would break, and then lots of money to fix it. Now, if you're an entrepreneur living anywhere and you have a great idea, you could spin it up on AWS, and if nobody uses it, you don't pay anything, and if lots of people use it, then you have a great idea that works. Yeah. And so this is the special time that we live in, and I think the opportunity here specifically is, you have a very active ecosystem with investors and very experienced operators, folks on this panel who can not only, help people who have a great idea with money, but also great advice. So I think we're in a situation where all regions have an opportunity to win, and the key is just taking enough shots on goal to create interesting companies that then bring more people to the area, and then it starts feeding on itself.
Good.
One thing I'd add to that is that, so I spend a lot of time globally looking for companies to invest in, and I think one of the biggest mistakes that a lot of people make is they kind of did the same thing that's happening in Silicon Valley, and I think that's a mistake. I think if you think about what wherever you live, it's different than what people know in other places, obviously. And the things that you learn, the community you live in, the problems that your community has, the experiences that you can bring to bear on building a company enable you to build something that's different, that's new, that's interesting, that's not the same. And I think a lot of investors, or a lot of entrepreneurs, they kind of look at Silicon Valley as like the path that they're supposed to follow. And I, as an investor, really wish they wouldn't do that. I really wish they would follow their own path based on the things that they learn from their communities and from the problem sets that they face on a daily basis, and build something that is unique in the world. Because at the end of the day, we don't need one more of X that has already been built 10 times in Silicon Valley and then 50 times more in every other part of the world. We need one more new thing that's based on something that is unique to you, the entrepreneur in your community. So I really wish we'd see more of that. Unfortunately, I think too many people copy, but I'd love to see the communities like this building new stuff that you can walk these halls and be like, whoa, that's new, I've never heard of that before. That's what I'm excited about when I travel around looking for things to invest in places like this.
Well, great. That's what we're all excited about, I think, here in Florida. Guys, we're out of time. Can we give the guys a round of applause? Nice job. I'll just close by plugging Florida Funders a little bit. For those of you who are investors, Florida Funders is a great way to get involved in angel investing if you have an interest. And if you're a founder, we're always looking for great companies. So with that, we're done. Thank you very much.